Hello, my name is Elliott Gue. I'm editor of Personal Finance, the Energy Strategist, and a brand new product called Stocks on the Run. Today I want to talk a little bit about a sector that I don't think gets enough attention, which is really the industrial sector of the S&P. If you say the word industrials to 10 different people, you'll probably get 10 different answers as to what they think it actually is. The reality is it is a very, very diverse sector, but it's a sector that's performed extraordinarily well over the last year. The S&P 500 Industrials Index has outperformed the broader market on a total return basis by close to 20% just over the last 12 months. There are a couple reasons for that. One is that it's extremely cyclical industry. In other words, it tends to do well relatively early in the stages of an economic recovery. The second factor, which is actually more important going forward, is that a lot of U.S. Industrial companies and big European industrial companies are focusing their business more intensely on the emerging markets. Now, what we've seen over the last year is that while the U.S. economy, the European economies are enjoying somewhat of a cyclical rebound from a very, very deep recession, the emerging markets are really booming again. What we saw was at the end of 2008 in China, the Purchasing Managers Index, which is an index that shows the level of manufacturing activity within China, fell below 50, which means that it was contracting. But very early in 2009, starting with the March figures, we saw a rebound back over 50. And by August of last year, we actually saw PMI figures back at their pre-crisis levels. In other words, Chinese manufacturing activity soared a lot more quickly and recovered a lot more quickly from the recession in 2008 and 2009 than even your most bullish pundits expected. That's really great news for the industrials group. There are a number of different subsectors within industrials. Two that I'll focus on today are agriculture and manufacturing. On the manufacturing front, a number of your industrial companies are involved in things like automation, products, and equipment used in factories. Obviously, we're seeing a much faster than expected rebound in Chinese manufacturing activity and in Indian manufacturing activity, really across your emerging markets. That's supporting demand for these automation and factory efficiency types of equipment. The other thing we're seeing is that even in the U.S., where the economy's been pretty slow to recover, we're seeing actually manufacturing activity bounce back a lot more quickly than your general economy. So that's really good news for companies that sell into the manufacturing industry. Another aspect to watch here is look for products that actually cut manufacturers' costs. In other words, products that can save on electricity, save on energy. Energy prices have obviously been rising a lot over the last 4 or 5 years, and manufacturers are looking for any way they can to cut back on their energy use. Agriculture. Agriculture is one of my strongest and favorite long-term themes, and it's actually a theme that I think is going to perform very well over the next 3 or 4 months as well. We've recently added a number of plays in personal finance to agriculture, as well as Energy Strategist, and actually our first pick for Stocks on the Run, which came out in February, was an agriculture-based play. Now, what's going on with this industry? Well, first of all, we're seeing an increase in consumption for all sorts of agricultural products from Asia. Now, there are a couple of different sides to this. One is obviously that as consumers get wealthier, they start to consume more in terms of total caloric intake per day. The total number of calories that they consume per day rises. But that is actually not the most important effect underway. One of the most important things we see is that as personal disposable income rises, consumers tend to eat more meat. They tend to eat more processed goods, processed cheeses, and they also tend to eat more sort of vegetables and fruits. Now, what all these things share is that they're much more agricultural intensive than your traditional grains, things like rice and wheat. Therefore, for example, to produce a single pound of beef requires as much as 7 pounds of grain to use as feed for that livestock. Therefore, an increase in consumption of meat relative to other products has a really pronounced effect on global demand for things like corn. And in fact, we've seen corn consumption on a very steady upward path for really the last several decades, mainly as a result of these emerging markets gradually consuming more meat as a percentage of their total diet. Now, obviously, this benefits agricultural concerns across the board. The two main areas in terms of producing and exporting agricultural products are really your Americas. North America, the United States, the world's largest producer of corn, Brazil and South America, Argentina and South America, large producers of commodities as diverse as sugar and soybeans. There are a number of different ways to play it. One of our favorite plays is fertilizer manufacturers. What we saw at the end of the financial crisis in 2008 and 2009, as we came to that sort of spring planting season for things like corn and soybeans in the northern hemisphere, we saw farmers really cut back on the amount of fertilizer they applied, really in an effort to save money. And also as a result of the fact that commodity prices were really depressed and farmers just didn't have the cash to go out and spend big on fertilizer. What we're seeing this year is not only are they fertilizing their crops more because crop prices have improved and their economics have improved, but they're actually having to kind of make up for a lost time last year. As a result of not fertilizing enough, nutrients in the actual soil are very, very low, and they're having to fertilize even more heavily than they normally would. Another area specifically focused on the industrial sector, agricultural machinery. Farmers all over the world are adopting more mechanized agriculture. It's all about getting more yield per acre that you plant. And a number of different big equipment manufacturers out there involved in producing things like combines and tractors. What we've actually seen is that orders have really picked up, especially for the larger machinery, which tend to be the most profitable for companies that produce agricultural equipment. So there are a couple of plays in the industrial space. We have agriculture, rising demand for meat, rising demand in terms of total caloric intake, powering demand for all sorts of things, including agricultural machinery as well as fertilizer. Also on the industrial side, we're seeing a global rebound in manufacturing activity. Benefits companies that make things like process automation equipment, process control equipment, and any type of product that actually allows manufacturers to cut their energy use. These are a number of plays coming up in your next issue of Personal Finance, so check it out online. It should be out in the next couple of weeks. Thank you very much.